still focused on the Monetary Policy Committee, but let's look at the fiscal side. Nigeria's government says it's disbursed about 330 billion naira to 8.1 million households under the National Social Safety Net program. Finance Minister Wale Edun said the payments, part of a 25,000 naira per household stipend, aim to cushion the impact of ongoing reforms, fuel subsidy, exchange rate, and the like. Now, of the 19.7 million households on the National Social Register, he says over 8 million have received at least one tranche, and they're expected to do about 3 tranches overall of 25,000. So it's supposed to be initially 5,000 naira over 6 months. Now it's going to be 25,000 naira over 3 months per household. All right, back to the Monetary Policy Committee meeting that's kicked off. Again, throughout the show, we've been getting everyone's thoughts. We're now happy to have Zeal Akaraiwe, who, of course, is the CEO of Graeme Blaque, with us in the studio. Zeal, good morning to you. Thank you so much for joining us. So, I throw it to you. The first guest said 50 basis points cuts. Our second guest said, well, a hold, but he wouldn't be surprised if he saw a 25 basis point cut. What's your expectation?
To be honest with you, I don't have any expectation.
You don't?
No,
yeah, you're sitting on the fence.
I'm sitting on the fence on this one. But I do know that the central bank is using a lot of data. And I know that as a monetary policy entity, there was a sacrifice of growth and productivity to stem inflation. And that was why the interest rates were hiked and all that. It's been 2 years now of the Cardoso regime. Inflation has come down significantly. It's still dropping. And I think there will be a conversation, but a lot of data is being looked at. But there will be a conversation around the sacrifice of growth and productivity. Can we now allow the economy to begin to expand and grow a bit? Because we need that. We can't stagnate in perpetuity. So there's a lot of data I'm sure they're going to look at, and they're thinking of how prices are affecting the common man, how the country needs to grow. But the inflation moderation is still a bit fragile. So that's why I said it's going to be very difficult to call. But there are things other than that, there are other things the central bank can do. Other tools to signal the direction they are going that may not necessarily be a cut. So I'll sit on the fence on that one.
All right, fine. Well, let's sit on the fence on that one. But when you've mentioned inflation, that's preempted my next question, because at the July meeting, Governor Cardoso was particular about month-on-month inflation, and he, at that time he was talking about it being a bit sticky. So it's moderated, but as you can see, food there's still higher than in the orange bar, higher than the aqua blue or something. But still, what's your observation of what you're seeing with a month-on-month inflation in Nigeria?
Well, I would say since the rebasing, inflation numbers have not been as predictable as we would have liked. But again, that comes with the rebasing. And so, but I expect that for the rest of the year, predictability may not be how we would like it to be. Again, like I said, primarily because of the rebasing. But I think going into January, I'm personally expecting a very steep fall in inflation. Personally, because if you look at year-on-year inflation, it's basically the prices last year versus prices this year, roughly speaking. And if I look at things that happened last year versus this year, I expect that, look at it this way. If price of an item or the basket of items were 100 last month, with the relative stability in exchange rate and macroeconomic indices, if that basket was still 100 this month, month-to-month inflation will be 0. So expecting inflation to fall off a cliff significantly downward is not a very far-fetched expectation. And I think that with the relative stability, I expect that going forward, especially the last quarter of this year, I'm hoping that when you compare, the stability will start to show in the numbers.
Okay, perfect. Because the Center for the Promotion of Private Enterprise, perhaps they are looking at the same figures and they are of that thinking. So they put out a note, this is of course run by Dr. Muda Yusufi, and they noted, of course, Governor Cardoso's 2 years in office, talked about the achievements, which are on the screen right now: transparency, improved liquidity, strengthening corporate governance, financial system stability, and the like. But they did also point out concerns, right? Which, of course, remain because the interest rate is still at 27.5. SMEs, access to loans, high borrowing costs, and the like. They want to see gradual easing. So, if I tie that to what you just said, if you think inflation is going to decelerate further, perhaps that opens room for easing.
We all hope so.
Yeah?
Like I said, the high interest rates is costing us a lot in productivity and growth. And as a country, we need to work on that. We need to grow.
Yeah.
We really, really need to grow. So, yes, I'm significantly optimistic that once inflation is considerably moderated in a way that we can all see sustainable in the long term, then we'll start looking at all the levers for growth.
Fantastic. Let's move to foreign exchange. We've, so far September, notable, appreciation of the currency. Yeah, started out at 1,526, and then Friday on 19th, it closed at 1,487. I'll admit now, I've been guilty of talking too much about dollar weakness, and thankfully we took the story on Argentina, who had to sell $1 billion in 3 days to defend the peso last week. So dollar weakness does not mean everybody is appreciating. But what would you point to? What's your observation of the appreciation of the currency, triggers, and so on that you would note?
We would have to go back a little on that. So you'd remember, I don't think there's any time Governor Cardoso has spoken that he did not say that the currency is significantly undervalued.
Right.
I don't think there's any time he has not said that.
Yeah.
What happened over the 2.5 years ago is what we call a distortion. The indices and the unorthodox way we were managing things distorted demand, supply dynamics, and all of that. And so that pressure reflected in the exorbitant depreciation of the currency.
Yeah.
As things are stabilizing, the currency is beginning to get more confidence. There's a significant amount of people who are willing to hold Naira because interest rates are good, the stability is there, the portfolio investors are more confident. Investors in general are significantly more confident. There's a lot of transparency in the market, the new FM systems. There's a lot, the code of conduct that was launched, the discipline in the market has changed. The parallel versus official market discrepancy that was as high as 70% is down to somewhere like 2%. All of those things were the work going on behind the scenes in order to make sure that not just the orthodoxy in interest rates for monetary policy, but how the market fundamentals work. Now, all of that, plus the accretion of the reserves, the transmission of what's going on in NNPC, the supply-demand behavior dynamics as a country has changed. All of these are significantly positive things for the currency. It's taken a bit of time for it to reflect, but as you can see, it's now reflecting. Going below 1,500 is a very, very significant move because for those in markets, you have psychological barriers.
Yeah.
The most significant psychological barrier we've encountered in a long time is 1,500.
Yeah.
The next one, in my own estimate, is 1,000. And so once you break the 1,500 psychological barrier, the expectation is that generally in markets, you accelerate to the next one and then hang around there. So you notice from 1,819, we came down, hung around 1,6, then 1,550, stayed there. Now we've broken it. As long as it can be sustained, I think they will continue seeing the appreciation. Fantastic.
Now, because you just touched on people, investors having more confidence holding Naira because of rates. And I guess that with where rates are, that now comes into balance, right? When you think about what decision they can make, because there's investors holding Naira versus, getting the economy to grow and so on. I've been meaning to ask you this. The transmission impact, the transmission effects of the MPR, the monetary policy rates versus the exchange rates, which do you think has a stronger effect on the economy, on businesses and so on?
It depends on which business you're referring to, right? I would say if you're talking about the manufacturing sector, that is heavily dependent on importing raw materials, you would say foreign exchange, right? Because 30% borrowing costs right now versus 30% moving the currency. We know it takes, if you borrow for 1 year at 30%, you're going to accrue 30% over 1 year. But if you don't manage your currency properly, you can lose 30% in less time. So for them, yes. For some other people, it would be interest rates if they don't have a heavy dependency on foreign exchange. But the foreign exchange rate feeds into inflation quite quickly. So I would say, looking at all in all, I would say the foreign exchange rate is a significantly stronger lever than interest rates.
Okay, fantastic. All right. So look, it's been great to get your thoughts there. We'll see what happens with the meeting. I did want to pick your brain on, so I'm moving away now from monetary policy. Now I'm going to the stock markets. There's been news that the NGX is considering extending trading hours beyond 2:30 p.m. The market's been doing well. It's up about 37% year to date, I think, as of Friday. But that being said, what are your thoughts on extending trading hours for the NGX?
I mean, like you said, digression is not my core area. But
yeah, just getting thoughts.
No, that's fine. But with the explosion of technology, right, everything has shrunk, right? Shrunk in terms of the speed of doing stuff is more, the efficiency is more. So in terms of extending trading hours, the amount of time you need to settle trades has shrunk.
Yeah.
So the lead time, the fact that you have to close early so you can do the back office work, with technology, those things are no longer impediments.
Yeah.
So I would think that extending trading hours would be, based on technology alone, a welcome development.
Fantastic. Yeah. But before you go, look, so with you thinking, your personal opinion that you see inflation decelerating further in Nigeria, and with where the currency is right now with the stability and whatever decision the MPC comes out, what's your outlook for the Nigerian economy just going forward, I guess, as we close out the year and beyond? Well,
to be honest with you, I remember maybe 2 or 3 years ago, you asked me this question, I said I was cautiously optimistic. Yes. Now I'm significantly more optimistic.
Okay.
You know how they say, over 2 years, they've shown working. The central bank has shown that I can't think of many things the central bank has said they will do that they have not done.
Right.
Might not have done it in the time frame we expected, but it's been done. And for a very long time, we actually have people debating what the MPC will do and the impact.
Yeah.
I think we've forgotten the days where it didn't matter what MPC did. And then we have real positive interest rates.
Yeah.
And inflation is down to 21. So you see, and we're coming from an era where we had negative real interest rates. So even if we're flat, we're still pretty good. So there's a lot of room for the MPC to maneuver. So looking forward, looking at the macroeconomic indices on oil production, revenue, import-export behavior, consistency of the market, liquidity, demand and supply. You look at the whole macroeconomic framework plus the discipline in the banking sector, the compliance department in CBN that's looking outward as well. You look at the recapitalization, you look at all of that, and I'm like, I can't see why I shouldn't be optimistic.
Yeah.
I simply can't.
From cautiously optimistic to significantly optimistic. Great stuff. Zeal, I always extract extra questions. Sorry. Okay. So this is the final question. What about the handshake with the fiscal side? Because there's, how important is that still going forward with all the work that the monetary side has done over the last 2 years under Cardoso and the stability? Obviously, the entire economy does not rest on monetary policy, right? So can you speak to the importance of still maintaining that handshake with the fiscal?
Well, I think it's in your language that they say you can't clap with one hand.
That's right. That is
so
right.
Fiscal and monetary have to make any sound, the two hands have to come together.
Yeah.
Now, we have to also understand that in terms of direction of travel, there is complete alignment between fiscal and monetary.
Yeah.
Now, the speed and the mode of travel, there will be some healthy debate around that.
Yeah.
But I can tell in terms of direction of travel, from my first-hand interactions, I know there's an alignment. But don't forget, it's also important to remember that there are some natural areas of tension. So, for example, if there's excess liquidity in the market, in the system, it's a nightmare for monetary policy because of the potential inflationary impact and all of that, and impact on interest rates. Right. But it's very good news for fiscal because it means they can borrow cheaper. So if you talk to fiscal and monetary in that area, I would be shocked that on the specific tools to use at that specific point in time, there will be some very healthy debate. But direction of travel for the overall economy, I can tell you firsthand that the alignment exists.
Fantastic stuff. It's always a pleasure having you on the show. Zeal Akaraiwe, CEO of Graeme Blaque, thank you so much for your time.
Thank you very much.